Good evening, everyone. Today's market presented a very clear picture of structural divergence, with capital flows distinctly gravitating towards the digital asset and cryptocurrency sectors, driving a specific shift in risk appetite. We saw the Nasdaq 100 ETF, QQQ, close at $722.82, marking a gain of 1.21%, while the S&P 500 ETF, SPY, advanced by 0.74% to $751.28. However, individual stock performances far outstripped these broader indices. For instance, the digital asset-related IBIT surged by 3.64% today, and Tesla, TSLA, saw an impressive rally of 6.43%. This indicates that capital is not broadly buying into tech growth stocks across the board, but rather making precise allocations to specific names highly correlated with digital assets and new productivity, such as electric pickups and autonomous systems. Turning our attention to the A-share market, the divergence there was even more pronounced. The SSE 50 index bucked the trend to close in positive territory, up 0.91%, even as the Chi-Next board fell by 1.77% and the Shenzhen Component Index dropped 1.16%. This stark divergence confirms that domestic capital is contracting into defensive sectors like high-dividend, large-cap blue-chip stocks, while simultaneously withdrawing from high-valuation tech stocks, especially those whose movements typically mirror U.S. counterparts. Therefore, our preliminary conclusion is that market capital ultimately flowed into two main directions: the cryptocurrency and digital asset main theme, and defensive assets represented by A-share core blue chips. Overall, risk appetite is highly bifurcated, with the U.S. market selective buying and A-shares, preserve the large, abandon the small, being the core characteristics of today's trading. Reviewing the global path, the A-share market in the Asian session already demonstrated typical risk-off divergence, with the SSE 50 rising against a backdrop of declining broader indices. This suggests that state-backed funds or insurance capital were engaging in defensive positioning. Moving into the U.S. trading session, the market did not decline due to Asian risk-off sentiment. Instead, it was driven higher by digital assets and core large-cap tech stocks, like QQQ. This indicates that capital actively chose to go long on high-conviction themes related to AI computing demand, as seen in the volatility of IBIT and MSTR, and the electrification trend, exemplified by Tesla. The turning point today occurred at the U.S. market open, with digital asset and crypto ETFs like IBIT and Tesla leading the sentiment, while A-shares Chi-Next and Shenzhen Component Indices dragged the market down. Looking ahead to tomorrow, we have several verifiable predictions. First, for the digital asset main theme, IBIT, we anticipate high-level consolidation with potential for some profit-taking after an initial surge. The key driver will be whether Bitcoin can firmly hold above $65,000. Second, for A-shares, we expect the SSE 50 to maintain its strength while the Chi-Next continues to face pressure, unless clear policy support for the tech sector emerges. Finally, for Tesla, TSLA, despite increased short-term profit-taking pressure, the overall trend remains positive. Today's model score was only 4 out of 10, primarily due to a significant underestimation of the synergistic capital momentum behind the digital assets plus new manufacturing theme, and insufficient distinction of the underlying logic for structural divergence between the U.S. and A-share markets. Going forward, capital is expected to continue trading around Bitcoin, Ethereum, and related U.S. stocks and supply chains. We need to closely monitor whether Bitcoin can effectively break through and stabilize above $65,000, as well as the opening direction of the 10-year U.S. Treasury yield and the U.S. dollar index, DXY. Strategically, we lean towards controlled long positions, focusing on the digital asset main theme and core AI computing bottlenecks. If Bitcoin stabilizes above $64,800 and shows an upward trend, consider increasing exposure to IBIT. However, if Bitcoin drops below $63,500, all crypto-related positions should be paused and reduced. Investors, please manage your risks carefully.